Now on to the Motown show. Let's get you the latest with respect to the global automotive story. And this week, we're going to be focusing on the European car market because European car market has hit a rare weak patch to begin 2026, marking the first year-on-year drop in the new vehicle sales since mid-2025. Now, data from the European Automobile Manufacturer Association show that the total new car registrations across the EU, UK, Norway and Switzerland and even Iceland fell about 3.5% in January to just over 9.6 lakhs of vehicles. This contraction signals a market still adjusting to the broader macro headwinds and a shifting consumer preference, wherein petrol demand is seen to be slumping, and that's the big story because the slump was led by sharp plunge in the petrol car demand, with registrations down roughly 26% on a YOY basis in January. Countries like France saw petrol sales half, down nearly 49%, while Germany's petrol car registrations were down about 30% YOY. Now, petrol models now just account over 1/5 of the new sales in the Europe. That is down from nearly a third a year ago. That is seen to be underscoring how fast combustion engine vehicles are losing the ground. But is the story electric? Let's deep dive into that, because in contrast, the electrified models are gaining momentum. Battery electric vehicles and hybrids and plug-in hybrids rather together make up around 69% of the new registrations in January, and that's a significant jump from about 59% a year earlier. Now, BEVs alone increased by a double-digit growth, with registrations rising roughly 14%, while plug-in hybrids were up over 30%. And according to ACEA's broader EU data, BEV captured close to 19% market share within the bloc in January, and that is up sharply from the prior years, and that is showing electrified models edging closer to the mainstream acceptance. Now, the shifting mix is also reflected in who's winning and who's losing ground. Let's deep dive into that, because Chinese EV makers, that is led by BYD, saw registration surge over 165% YOY. That is growing their foothold in Europe and outpacing the stalwarts like Tesla. But meanwhile, US automakers, that is Tesla, is seen to be suffering its third straight month of decline in the European sales. That is down around 17%. Because legacy brands such as Volkswagen, BMW, Toyota reported softer registrations, reflecting competitive pressure from the low-cost EV entrants and hybrid preference. But the question is, why this trend is accelerating? A couple of factors there. First is the changing consumer demand. European buyers are increasingly shifting towards the electrified and hybrids and plug-ins and whatnot, and pure EVs rather, driven by tighter emission regulations, urban low emission zones, and improving the charging infrastructure. The second aspect is the regulatory push, because stricter EU carbon standards and tougher fuel consumption rules are accelerating the manufacturers' EVs investment, but also means that the traditional petrol and diesel models are rapidly losing the appeal. And the third big factor is the competitive pressure from China, because Chinese brands are undercutting the European rivals on price and feature sets, and that is helping accelerate the electrified adoption and forcing the incumbents to adjust the strategies. But now let's talk about the market outlook, because while January is typically a weaker month seasonally, analysts say that the data reflect longer-term structural shift more than the temporary weakness. EV's share has now surpassed the ICE in many segments, and the broader trend suggests that the petrol and the diesel sales may continue to shrink sharply throughout 2026, especially if incentives for the EVs and hybrids grow stronger. Now, EVs and PHEVs penetration is likely to expand beyond 70% of the market by the year end, supported by falling battery costs and more new launches. Is the traditional manufacturers that face a make or a break pivot toward the electrified platforms or risk the further share loss. Now, the bottom line for the European automakers, that is in the midst of the fundamental transformation. Traditional petrol demand is collapsing, EVs are rapidly gaining the market share, competitive dynamics are shifting with new global players. While the overall volumes dipped at the start of the year, the underlying trends point to an industry in transition rather than a decline.